Why Shopify removed 10% of its workforce and its past and future. You must have heard about Shopify, right? Shopify is a Canadian multinational e-commerce company who has its headquarters at Ottawa, Ontario. Shopify is the name of the e-commerce platform for online stores and retail point-of-sale systems. It is one of the most well-known companies, which hires a huge chunk of its workforce from the country itself. However, the recent news has something different to say. Recently, they have decided to lay off 10% of their workforce. But the obvious question is, why? What made them lay off 10% of their workforce? Is the company undergoing some internal issues? Continue watching the video till the end to know more. Hey everyone, and welcome back to yet another video from our channel. I hope you guys are doing extremely well. In this video, we will be talking about why Shopify removed 10% of its workforce. We will be covering every aspect relating to this topic, along with the past and the future of the multinational company. So if you are new to this channel, then do make sure to hit the subscribe button. With that being said, let's hop right into the video. The recent news about the multinational Canadian company has shocked the hell out of people's mind. It was reported that Shopify was laying off 10% of its workforce this Tuesday, since the company has been struggling with sales growth due to a post-pandemic slowdown in online shopping. The United States had listed down that the shares fell down around 14%. That made each share valued at around $31.29 after the company said that it witnessed a pullback in online orders. Shopify was one of those companies that hit their jackpot during the COVID-19 lockdowns, as merchants turned to its platform to set up online stores. As a result of this, the company ramped up their investments on its workforce and technology, and they placed their bets that the boom would not subside. But as it turns out, things were quite temporary. The CEO of the company, Toby Lutzker, in a letter addressed to its employees, said that the consumers were now returning to shopping at brick-and-mortar retail stores, and online shopping trends have now returned to the level they were at before the pandemic began. Was this surge to be a temporary effect or a new normal? And so, given what we saw, we placed another bet. We bet that the channel mix, the share of dollars that traveled through e-commerce rather than physical retail, would permanently leap ahead by 5 or even 10 years. It's now clear that the bet didn't pay off. Ultimately, placing it was my call to make, and I got it wrong, he stated. The CEO indeed went on to this by claiming that the roles that were being affected were the recruiting, sales, and support roles. With the company regaining its speed and reopening, the company has now lost its peak point as Canada's one of the most valuable companies, and its shares have also lost nearly 3/4 of their value so far this year. The company has now tied up with social media firms like Twitter and YouTube as influencers, who grew popular online, starting to sell their own brands to offset slowing sales. The CEO claims that the e-commerce growth would now continue along a loftier, pandemic-fueled trajectory. In the recently posted blog by the CEO himself on the Shopify's website, Lutzker claimed that the company was letting go of around 1,000 employees. During the pandemic and lockdown situation, the company's workforce was reported to have jumped from 1,900 in 2016 to around 10,000 in 2021, and this was done just to meet the expected growth. He claims that the cuts primarily affect people in recruiting, support, and sales. We're also eliminating over-specialized and duplicate roles, as well as some groups that were convenient to have but too far removed from building products. He claims that the teams that they are left with are now either focused on building products or directly supporting those who do. The company was sending emails to those affected, and they will have a meeting with a lead in their team. What we see now is a mix, reverting to roughly where pre-COVID data would have suggested it should be at this point. Still growing steadily, but it wasn't a meaningful 5-year leap ahead. The Canadian Ottawa-based company had witnessed a huge upsurge in e-commerce growth during the height of the COVID-19 pandemic, as lockdowns forced people to shop online, pushing the company to invest to keep pace. The executives were expecting that the surge would be permanent, but to their utter dismay, their growth since then has fallen back to pre-COVID trend lines. Ultimately, placing this bet was my call to make, and I got this wrong. Now we have to adjust. As a consequence, we have to say goodbye to some of you today, and I'm deeply sorry for that, Lutzker said in the post, adding that the company will offer a generous severance package to those affected, including 16 weeks of severance pay, an additional week for every year of tenure at Shopify, removal of any equity cliff, and extension of medical benefits. We'll remove any equity cliff and extend any medical benefits. Knowing that Shopify is just one stop on a career journey, we'd also like to help set everyone up for success as they take their next steps, said the CEO. Adding on to this, he said that the company will offer outplacement services with access to career coaching, interview support, resume crafting, etc. The CEO had founded the company back in 2006. He claims that the executives thought the company had to expand to match what they expected would be a 5 or around 10 years leap ahead in e-commerce growth. Instead, the consumers are now returning to physical and retail stores, thereby reverting back to the previous shopping trends. The e-commerce company announced an emphasis on remote work back in May 2021 in order to broaden out their talent pool. Their career page then said that it can employ people directly in countries where it has a legal entity established, and may be able to hire people as contractors in countries where it does not. Most of the adaptations we've had to make have been to grow into something bigger. This time we grow into something more focused, more driven, and more singular in mission, said Lutke. As of now, the Shopify shares have plunged more than 15% to US $31.12 in New York after the opening bell this Tuesday morning. The shares were already going downhill by a whopping 73% for the year as of Monday's close. The company has continued to see its stock plunge down since losing its title as Canada's biggest publicly traded company at the beginning of the year. Their share price surged more than 58% between 2nd of March 2020 and the 6th of May 2020, when its market capitalization had reached $121 billion, hence unsetting the Royal Bank of Canada as the most valuable company on the Toronto Stock Exchange. Since then, Shopify has fallen down that list. Analysts have also cut their expectations for the company's upcoming earnings call. The ATB Capital Markets Incorporated has cut the company's estimated target price to $95 per share from around $110 while maintaining an outperform rating on the stock. The analyst has reduced his own operating expense estimates to $2.8 billion for the year 2022 following the news of the layoffs, and said he expects Shopify to still roughly break even on an operating cash flow basis. He predicted that the employee cuts would eliminate around $100 million to $150 million in the company's cash costs. The analysts, however, have also lowered his revenue forecast by around $5 million and gross merchandise volume estimate by 5%, pointing out to Lutke's letter indicating lower revenue than the company had anticipated. Last quarter, Shopify called out the impact inflation was having on the discretionary goods its merchants sell as a headwind. The issue was likely only intensified, said the analyst. The company had reported an annual revenue growth of about 86% in 2020 and 57% in 2021 to about $4.6 billion. But now the company is forecasting that this year's numbers wouldn't meet the pandemic-boosted increased revenues. The company is expected to release its second quarter earnings on Wednesday, just before the market opens. Do you think Shopify will be able to come back to the same peak once again? How will they tackle the current problem that they have been facing? What actions should they take in order to do so? Let us know your thoughts in the comment section down below. We would love to hear your thoughts on this while we keep working on making more such videos. Well, that brings us to the end of this video. We hope you have enjoyed watching the video. Please like the video if you have not already, and make sure to hit the subscribe button. Don't forget to press the bell icon to never miss another update from our channel. With that being said, let's meet in another one of these videos. Until then, see ya.